Okay, welcome to today's Impact webinar. Impact provides consulting services to nonprofits, offering training and support to users of Blackbaud Razor's Edge and Financial Edge. This is the fourth of our summer webinar series in the Financial Edge Pre-Audit Tips series. I'm your presenter, Miles Matsumura, with Impact Consulting, and I'm located in the state of Hawaii. As before, don't worry about note-taking. A PDF of this presentation will be emailed to you, and we will also send you a link to the webinar video in a day or two. We've come to the end of our summer webinar series, and we'll start again in the fall. And I may add new topics to the series, so keep an eye open for an email announcing our fall webinar series. After today's webinar, I'll be sending out a survey link, so you may let us know what you think of these webinars. Today, we're on tip number 5, fix date discrepancies that cross fiscal years. Let's begin. During audits, AP and AR reconciliations are a thorn in the side for many users. They get frustrated to find that their aging and outstanding balances reports do not match their trial balances. It's like they just fall off the cliff. So during the next 20 minutes, we will solve all of your problems. There are many factors that prevent balances from reconciling. To cover them all would require too many sessions. So today we will cover just 2 items: reports post statuses filter and transaction date and post date report settings. Let's take the first one. Like most larger accounting systems, Financial Edge consists of modules. When you post, data from most modules flow one way. Only the cash management module flows in both directions. Let's discuss the implications of this. When we say that data flows in both directions, that means a journal entry in the general ledger can update the cash management module, which NXT calls the treasury. To do that, you must checkmark the second box in your journal entries. If a bank account is listed in the journal entry, then that bank account's check register will be updated by the journal entry. The same is not true for any other module. If your journal entry changes the GL balance of accounts payable, accounts receivable, or any other module, then your journal entry may create an irreconcilable difference between the general ledger and those modules. The journal entry may end up increasing the discrepancies. The only type of journal entry that will not create a discrepancy in those modules are entries where you reclass a line item without changing the balances. In other words, entries that net to 0 change in balances. So as much as possible, do all of your adjustments within those modules, not in journal entries. Getting back to post statuses report filters. All modules except the general ledger contain both posted and unposted data. That means to reconcile, you must set your report filters to posted. And this is a common error because those module reports are set to all data. At audit time, a lot of folks forget about restricting their reports to just those which are posted. That will remove unposted data from your reports and reduce your discrepancies. But by default, AP and AR reports include unposted data. So let's go through the steps of setting the filter. And by the way, I will just demonstrate today's lesson using Financial Edge's database view. Most of you use that version. And for this lesson, the database view is easier. Also, Financial Edge NXT does not yet have accounts receivable, so you must use the database view. I do recommend NXT's AP module, however. It is very powerful. And with the move of check printing from AP to the Treasury, it's become much easier to issue checks from more than one module. Perhaps I'll talk about that in a future webinar. But for today, my screenshots come from the database view. For most reports, filters are on the second tab. The filter we want to change is near the bottom, Post Statuses. Click on All, then on Selected. Another screen will pop up. On that screen, choose Posted. Then click on the right arrow in the middle column. That will move Posted into the box on the right side. Press OK. You have now successfully changed the filter. That brings us to the second item, date settings. You might ask, why date settings? I'll answer that question with another question. Which modules use which dates? Or more accurately, the reports of which modules use which dates? Let's start with the easy one, General Ledger. Accounts payable. Accounts receivable. Cash management. Now, here's a scenario. The new fiscal year begins next month. Your staff purchases items now. Half of the items they purchase will be used this month. Half of the items will be used in the new fiscal year. Your AP person records invoice dates in the transactions date field. However, to expense items in the correct fiscal years, your AP person does two things. If an invoice is for items to be used in this fiscal year, he or she sets the post date the same as the transaction date. But if an invoice is for items to be used in the next fiscal year, then your AP person chooses a post date in the new fiscal year. This is a typical accounting practice, right? Now it is 2 months later and your annual audit has begun. Your auditor asks for an AP open invoices report, which you provide. The auditor then compares that report with your trial balance report. Here's the problem. The open invoices report includes both sets of invoices, while the trial balance only includes the first set of invoices. The result is your AP balances do not reconcile, but both reports are true. Now, it is possible to run the open invoices report and filter the report by the post date. Doing that will reduce your AP discrepancy by eliminating the second set of invoices from your payables balance. You can do that. That option, however, understates your true payables at the end of the fiscal year. The better option is to report your true payables while subtotaling invoices charged to the next fiscal year. By that, I mean reporting to the auditor, here is the total for open invoices at the end of the fiscal year. Of that total, this is a subtotal for items to be expensed in the next fiscal year. What is needed then is a way to generate a report on the second set of invoices. And that is what tip number 5 is all about. And speaking of tip number 5, I realized while preparing these slides that it is mistitled. It is not about fixing date discrepancies across fiscal years, although you may do that. It's about reporting on date discrepancies that cross fiscal years. So let's go through how to do that. To get reports of transactions with date discrepancies, you'll set up the same report in 3 modules to filter data by both a transaction date and a post date. That report is the account distribution report, and it is available in these 3 modules. Now, what do we do with the account distribution reports? Well, you will use the reports to identify prepaid expenses, to identify accrued liabilities, and to identify date errors. Now, date errors. The example on the screen is an easy one. When the new year begins, it is not uncommon for staff to enter the previous year out of habit. However, if you're also in the habit of soft closing each month, then you'll avoid that type of date error. Soft closes are easier to do in Financial Edge NXT than in Database View. Go to General Ledger and select Settings. That will take you directly to Fiscal Year Settings. In the Status column, you just click on the white button and it's now closed. That's all there is to it. Let's look at the account distribution report for prepaid expenses and accrued liabilities. Here are where you'll find the account distribution reports. In the Accounts Payable module, you'll go to Reports, Invoice Reports, then Account Distribution Report. In the Accounts Receivable module, you'll go to Reports, Transaction Reports, then Account Distribution Report. In the Cash Receipts module, you'll go to Reports, Transaction Reports, then Account Distribution Report. In each case, you begin by clicking on New. That will open a new window. Now, what you do next will depend on whether or not your fiscal year is the same as the calendar year. If it is the same, then you'll use this calendar year and last calendar year for the 2 date options. Now, remember, the audit year is past, so last calendar year is the audit year. If you're trying to identify and subtotal prepaid expenses, then you'll use the date settings on the left. If you're trying to identify and subtotal accrued liabilities, then you'll use the date settings on the right. They're opposites of each other. On the other hand, if your fiscal year is not the calendar year, then there are a few more steps for setting the dates. Now, module reports do not include fiscal year or fiscal period as options. So you'll have to change the transaction date and post date settings to specific range. Then you'll define specific start and end dates for both. For example, if your fiscal year starts in July and ends in June, then if you're trying to identify and subtotal prepaid expenses, you use the date settings on the left. If you're trying to identify and subtotal accrued liabilities, then you'll use the date settings on the right. And as before, the settings are the opposite of each other. Here are samples of the reports they generate. Assuming that the input dates are correct, then if the transaction dates are in the audit year and the post dates are in the next fiscal year, then the total represents prepaid expenses. On the other hand, if the post dates are in the audit year and the transaction dates are in the next fiscal year, then the total represents accrued liabilities. Of course, in both cases, you should review the listed transactions to be sure the line items were correctly dated. And I don't have a tip for that. It will depend on your own knowledge of the vendors and the items they supply and for which fiscal year they're intended. The last step that remains then will be creating your year-end journal entries for prepaid expenses and accrued liabilities. Okay, looks like we're on schedule to keep our presentation under 20 minutes. Now, today's topic has been less specific than the earlier webinars because not all accounting practices as it relates to year-end are the same in each organization. Whether these reports prove useful or not and how you use these reports will depend on your own accounting practices. But the intent of tip number 5 is to make you aware of another tool in your Financial Edge toolbox. Okay, now we have a few minutes to take your questions, and you can turn on your mic and camera and ask your questions. Okay, if there are no questions, before you leave, just a reminder for your advancement and development fundraising colleagues. Our monthly Razor's Edge webinars continue. The July webinar takes place tomorrow. Please encourage your fundraising colleagues to join that group. If you'll write to me, I'll send you the registration link. Share it with your Razor's Edge users. Here's my email address and my calendar link. And as I mentioned earlier, I'll be sending you an evaluation survey by email. Please complete it to help us improve. And that's all for our Financial Edge summer webinars. And thanks again for attending. Oh, I see that we do have some chat feedback. And thank you, Jean. Thank you, Jessica. And no questions. So I'll stay on for a few more minutes, and otherwise, goodbye.